This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending November 21st, 2020. Our question this week is, do you have to be wealthy to be financially free? The answer will be provided later in the video. This week, the market was mixed. The Dow Jones Industrial Average decreased minus 0.75% on Friday and was down minus 0.73% for the week. The S&P 500 decreased minus 0.68% on Friday and was down minus 0.77% for the week. The Nasdaq decreased minus 0.42% on Friday, but was up 0.22% for the week. Looking at the week, we can see that there were 6 up finishes versus 9 down finishes for the indexes. On Monday and Thursday, the major market indexes were up, and they were all down on Tuesday, Wednesday, and Friday. The new unemployment claims were 742,000 versus 710,000 expected. Continuing unemployment claims were 6.37 million. President Trump was reported to have admitted that Biden won the election, but he still will not concede. Moderna reported that its vaccine is more than 94% effective, and Pfizer updated their coronavirus report, stating that their vaccine has 95% efficacy. The Democrats and the Republicans are still far apart on agreeing to a stimulus deal, and the U.S. Treasury Secretary, Steven Mnuchin, is allowing the Federal Reserve's emergency lending programs to expire. New unemployment claims, continuing unemployment claims, presidential election results, vaccine trial results, congressional stimulus deal talks, and U.S. Treasury Secretary policy decisions are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers are billionaires, the wealthy. Most billionaires are billionaires because they own thousands of shares of stock. Their wealth is tied to the stock market, and they will do what they must to drive the stock market higher. Which brings us to our question of the week. Do you have to be wealthy to be financially free? No. You do not have to be wealthy to be financially free. In fact, you do not have to be debt-free to be financially free. To be financially free, you have to have assets that generate enough cash flow or income to cover your monthly expenses. For example, if your assets generate $1,000 per month and your monthly expenses are $800 per month, then you are financially free. Here are some examples of assets that can generate cash flow. Stocks, bonds, rental property, business, royalty assets like books, music, and videos, pensions, and yes, Social Security. So what if your monthly expenses are maybe a more realistic $1,200 per month? However, let's say that you can generate $800 per month from your cash flow assets, and you receive $800 per month from Social Security. Your cash flow is now $1,600 per month, which is more than enough to cover your monthly expenses of $1,200 a month. That is financial freedom. You do not have to work for anybody. That is, you don't have to be a wage slave, or you don't have to operate a small business or have a side hustle. And that is being a workhorse. You can be financially free if you can generate more than your expenses every month. You do not need to have $2 million to $5 million in wealth like so many so-called financial experts tell you. To be financially free, you can have as little as $100,000 to $200,000. So, if you are in your 50s and you are nowhere near having $2 million in wealth, please don't despair. Know that you can still be financially free by the time you draw Social Security or even earlier if you can learn how to generate cash flow from the stock market or from some other cash flow assets. With a stock portfolio worth $100,000 to $200,000, it is possible to generate $800 to $8,000 or more a month in cash flow from your portfolio. The Southside portfolio is greater than $100,000, but it is less than $200,000. And you can see that it generates cash flow of at least $1,000 per week. The Southside portfolio generates at least 1% every week. Do you own any assets that generate cash flow? Do you own any stocks? If not, why not? Are you afraid that the market might go down? The market will go down again at some point. After all, this week we had 3 down days versus 2 up days. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending November 21st, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Roku. That's ticker symbol ROKU. It is in the second column. It increased 15.36% for the week, and it was up 2.92% on Friday. Roku is a streaming device company. It is the leader in over-the-top streaming devices. Its stock has been the top performer on the list several times this year. I did not trade Roku this past week, but I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from using the Southside strategy. The Southside strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of November 21st, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 23% versus 10.06% for SPY, a difference of 12.94%. I am beating SPY by 12.94%. This week, equities, including puts, calls, and ETFs, make up 77.45% of the portfolio. Cash is 22.55%. The cash flow generated for this week was 1.2% of the portfolio account value. The account value changed by minus 0.11%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.77% this week. I sold option contracts on 8 positions this week, 6 calls and 2 puts that ranged from $104.35 to $408.86. You can get more details, including the total dollar amount of cash flow for the week, on the website, southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.